So there are two big tax breaks when it comes to your tax return. One is a tax deduction and one is a tax credit. Now, I will define both of them, but I'm going to say right off the bat, tax credits are way cooler than tax deductions. So here's the difference. A tax deduction is a reduction in your income. So what that means is if you have, $1,000 of income and you have a $300 tax deduction, that $1,000 gets reduced by that $300 tax deduction, and you now have $700 of taxable income. Let's say you're in the 10% tax rate. You are actually now paying tax on $70 of that $700. So of that $300 tax deduction, it's really saving you about 10%, which is $30, because instead of paying 10% of $1,000, you're paying 10% of $770. A tax credit, on the other hand, is a dollar for dollar reduction in your tax liability. So same thing. Let's go through the scenario. You have $1,000 of taxable income, but you now have a $300 tax credit, not a $300 tax deduction, a $300 tax credit. So that $1,000 times 10% is $100 of tax. The tax credit is a complete dollar for dollar reduction. 100 minus 300, you're now due a $200 refund from the IRS due to that tax credit. Unfortunately, there are only very specific things that are, tax credits. Some of the examples of you receive a tax credit for your dependent children on your tax return. It's called the child tax credit. You receive a tax credit for certain energy efficient improvements that you make. If you buy solar panels, these kind of things. But if ever you have an opportunity to get a tax credit, it's always way cooler than the deduction.